Hey everyone, welcome back to my YouTube channel. Today's video is a special one. I've decided to share a Currency Pros community exclusive, my personal 4-hour swing trading plan. The contents of this video can change your life if you allow it to, yet it still pales in comparison to the value provided within our community on a weekly basis, so that's why I feel comfortable releasing it publicly. Now, I am releasing this video in hopes to inspire traders to make a change in simplifying their trading. In my opinion, the current landscape of the trading industry has become quite ridiculous in terms of complexity, and I think everyone could use a good reminder that technical analysis is actually simple. And the only real difficult aspect of trading is the psychological battle that occurs in your own mind. Now, this video is very raw because I was talking directly to my community members. So I think this will be a great contrast for everyone here on YouTube, mainly because it's not scripted or heavily edited for clickbait. This is an example of content within my trading community based on real trades that I have taken and shared with them. Enjoy. Hello everybody, hope you're all doing well. In today's video, as promised, I'm going to be breaking down my swing trading plan step by step. So let's not waste any time, let's dive right into it. So on the right hand side of the screen right now, you can see this is the trading plan. It was created using Notion, which is a free platform. If you guys want to download it, you can on the Notion website, just search it on Google or something. Very straightforward, completely free. I'm not going to share this exact template with you all, because when I do that, it means that I'm not able to edit it anymore. It makes things weird on my end. So if you would like to utilize this exact trading plan, just try your best to recreate it on Notion, or better yet, personalize it to your own liking, because this is specifically for me and my lifestyle. This isn't necessarily going to work for everybody. I'm personally trying to lean more towards swing trading because I feel that it better suits my lifestyle. So I don't trade on the low time frames anymore, like 1 minute, 3 minute, 5 minute, etc. I am comfortable trading on the 15-minute time frame, but again, I just want to lean more towards actual swing trading. So trading like once, maybe twice a week, and holding those positions for like anywhere from 1 to 5 days, ideally. I feel that it would best suit my lifestyle for myself and my family, as well as future travel plans, future business endeavors that may need more of my attention. So I feel that this is the best way to go. Now, with that being said, I've been testing this for quite some time now, and this style specifically was inspired by our coach, Steven, because he started trading this way, and it really inspired me because of the simplicity of it and as well as his consistent results. So it inspired me to make a bit more of a change. I had been struggling with like lifestyle things for quite some time, trying to fit trading into my lifestyle. And I saw this as a good opportunity to fix that. So it's been going quite well. I've gotten a lot of peace of mind, and it's eliminated over trading for me basically, because I was having an issue with patience and over trading. And so this is basically forcing me to improve in those lacking areas in my own personal psychology. So it's been really great. Now, enough rambling. Let's go through the actual steps for this trading plan, and I'm going to show you some examples on the chart as well. So currently the chart here is NZD USD on the 4-hour time frame. Within this range in particular, I caught basically every move. I was just playing ping pong up and down. I caught the majority of this right here. So just to quickly go over, I caught the buy right here. Right from the low, right to the high here. I caught that. As soon as price started pushing to the downside, I looked at this range here, and then I was able to get involved in a sell right here, and I took profit at this low right here. And then when price retraced again, I got involved again, basically right at the top, and then took profit somewhere in that region there. So just up and down, very profitable positions here. And I did that using all the things that were taught in the course about market structure, order blocks, imbalances, etc., liquidity concepts, all of those things, but with a much more simplified entry process. And all that entry process is the Fibonacci tool. It's so simple, guys. It's really kid stuff when you look at it. Very, very simple. And the reason for this is because when it comes to swing trading, when I'm only trading like once or twice a week, I care a lot less about getting the most precise entry possible and I care more about just being involved in the trade. Because just imagine this for a second. I'm waiting like 3, 4, 5 days for a trade to line up, right? Being very, very patient. And then if I'm targeting like an extreme order block, and price misses it by just like a couple pips or something, and then it takes off without me and goes in my direction, you can imagine how that would be pretty frustrating, because I was patient for so long waiting for that opportunity. So basically, I'm sacrificing a bit of risk to reward ratio, because as we all know that targeting order blocks gives us a very high risk to reward ratio the majority of the time. I'm sacrificing that risk to reward ratio to just simply get involved in trades, because me eliminating that part from the process, it just makes it a lot more simplistic for me, right? I just focus on market structure, and if I get my sentiment right, whether price is going up or down, basically have a 50-50 chance of getting that right, and the chance is higher because of my education in this space. So it's just less for me to focus on, basically, at the end of the day. So as long as I focus on proper market structure and I get the sentiment correct, and then I can add confluences such as order blocks and imbalances and liquidity, then all of those things combined, it makes for a very good trade. So then once my trade idea is solidified, I simply use the Fibonacci tool, which is basically just a way of identifying extreme premium or discount pricing, right? I've made plenty of content about premium and discount pricing in the past, and this is just a simplified version of it. So basically, when most people teach about premium and discount pricing, they are teaching to just measure whether you're in a bullish market or a bearish market, you measure the current range that you're in, and you just simply look at the 50% line. And anything above the 50% is premium pricing. Anything below the 50% is discount pricing, right? We obviously want to sell high and buy low. So all this is a more extreme version of that, right? This should be at 71 and 79. So this is just a more extreme version of it. So instead of just focusing on the 50%, this is a more accurate way to do it, for me at least, and at the same time being more simplified. So instead of, I'll apply it to the charts down here in a sec so you can visualize it. Instead of targeting an exact order block, like this, for example, obviously in this case it was tested, but let me zoom in a little bit more here. So instead of targeting an exact order block, you just simply set your entry and stop loss and take profit based on the Fibonacci tool. So it's really, really straightforward. And I'm going to use the replay tool here just to help everybody visualize this. And yes, this was a trade that I actually took. I do have proof of it as well. So swing high to swing low, drag the Fibonacci tool from there. Let's just extend it out a little bit. So this is why it can be a lot more simplified, right? A lot of people, when they're just learning about order blocks and imbalances, etc., they would maybe get confused and think this is an order block, which it technically is, I guess. This is also an order block here. And they get confused and don't know which one to choose, right? So this is a way to simplify the process. So instead of focusing on which exact order block to choose when there's like 2 or 3 to choose from, or which imbalance is valid, etc., you can simply see what lines up with these two retracement numbers, okay? The 71% and the 79%. But basically what we're looking for is the same thing. We're looking for these numbers to line up with an interesting area in price, right? Either an imbalance or an order block, or ideally both. So let's just go through the trading plan on the right-hand side here before I get too ahead of myself on the charts. The trading plan states in the risk and time category here, I'm only trading on the 4-hour time frame, okay? This is a swing trading strategy. Now, that's not to say that this strategy can't be applied to other time frames. Of course it can. This criteria here can be applied on any time frame at all. I'm just choosing to focus on higher time frames because it is a swing strategy, and this will help me get involved in trades that will last a certain duration of time. Now, next up, I have stated here only 0.5% risk of my capital per trade idea. The reason I put trade idea is because, well, this ties into the next point, split risk across 2 positions, okay? So as you can see, I have 2 Fibonacci levels on the chart here. Instead of choosing one of them, I'm actually, a lot of you may be familiar with this term, I'm basically dollar cost averaging the trade idea. So I'll enter one position at the lower line here, 71%, and a second position at the 79%. So obviously at the 79%, that's a better price. And if and when price turns in my favor, in my ideal direction, then it compounds together and it actually makes a more profitable position when it hits take profit, and less of a loss if it hits the stop loss. So it's actually a really interesting way to do things. I've been testing that out quite a bit lately. Instead of just entering one big position at one of these areas, I split it into two and basically mitigate my risk a little bit and also compound my profits a little bit more. So it's just a more favorable thing to do, at least I've been finding. I do need to test that more, but so far it's a very nice way to do things. It also makes it easier to take partial profits if you want to do that. So next up, I have just written out no trade interference, set and forget. Okay, so this is pretty straightforward. It's just basically reminding me to not touch my trade. It's called swing trading for a reason. I just want to set the trade and then just back off and let it do its thing. I don't need to move my stop loss to break even or anything like that. Obviously you can if you feel comfortable doing so, but for me personally, I find my results are better when I just let it do its thing. The more I interfere with a trade, the worse the outcome is usually. So I need to just back off and let it do its thing. I need to trust my analysis. When I get into a trade, like I wrote down here, set it and forget it completely. So now let's go through the actual process. I have a checklist set here, so I can literally tick off each one of these in the Notion app. So the first thing here is wait for a clear break of structure with imbalance. Okay, so let me just point out the break of structure here. This was the overall break of structure. Now I'm only focusing on the overall swing structure, okay? So I'm not focusing on this minor structure here or this or this. I don't care about any of that. This is the 4-hour time frame. I'm only focused on major swing points. This was a major swing. This was a major swing. That would have been, that was a liquidity grab, but that's besides the point. I'm focusing on the major structural points here, okay? So this is where my break of structure was. Now, did it cause imbalance? Yes, it did, because we can see that both of these lines actually line up nicely with the imbalance. It's within that bearish candle right there between the previous bullish candle and the next bearish candle here. So there is a gap there, which is the imbalance. So we can check that off the list. Identify where liquidity has been purged is step number 2. Well, liquidity was just purged to the upside here, right? So that's step number 2, pretty straightforward. Locate the recent extreme order block. Okay, so the extreme order block would be right here. So this is also technically an order block, but that's going to be used as inducement, right? That's another form of liquidity right there. So that also ties into step number 2. So step number 3 is locate the extreme order block, which is right up here. Now, the reason for doing so is not because I want to enter at the order block. That's not the criteria I'm using for my entry, but I want to be aware of where price could potentially react to. If there was a significant unmitigated order block somewhere above this that also had imbalance, then I would be much more cautious of taking this trade, right? So step number 3, locate the extreme order block in the recent move. So I did that. Now draw Fibonacci from swing points. Already did that, right? So this was the swing high. This was the swing low. I know this can be a bit confusing here because it's so clustered, but if you really understand candlesticks, then, I could get really nitty gritty about this. I'm going to try and keep it simple. But basically, we had a high here, a low here, a high here, a low here. Like, it really gets detailed. But basically, this is the current swing high. We had another low, but just a tight consolidation. So instead of getting too finicky about it, I'm just looking at the major swing points, which would be here to here, in my opinion. You could also draw it as, you could also draw it like from here to here. Really wouldn't have changed the trade too much. So that would also be valid. You could look at just the overall structure and say, this is the swing high, this is the swing low. That's perfectly fine. I was a little more careful about it, and I identified this as the swing high. So I drew the Fibonacci, right? Set limit at the 79% Fibonacci and set limit at the 71% Fibonacci. So would literally just set a limit order here, and as well as a limit order there. Now, the last thing here is the stop loss is at 100% and the take profit is at 0%. So stop loss at 100% for both of these positions, take profit at the 0%. So basically the 100% and the 0% are just the swing high and swing low. If you pull up the Fibonacci retracement numbers, you can just see here it's 0 and 1. If you put that into, what is it, percents, that would be 100%, you know, we got 79%, 71%, 0%. That's why I call it that. But I keep my levels off because I like to keep my charts as clean as possible. So this is basically what it is, guys. So the risk reward ratio, I am taking a bit of a hit there. You know, I used to have 5 to 10 R trades. I'm not going to really be seeing that anymore. However, I'm perfectly fine with, you know, just under 4R for the 79% retracement, or in some cases that might not even get triggered. Price might hit the 71 and then go back down to the 0, and that's that. And that means that this trade would have been active, but the other one would have not, which means this one is just under 2.5R. Again, I'm fine with that as well, because I'm focused more with this mindset shift that I'm having more towards swing trading instead of day trading. I'm focused more on just increasing my capital so that I can have more profitable trades without having bigger trades, right? I don't want to target more. I just want more capital so that the smaller trades are worth more. That's really my focus lately. So, and just moving forward. So that's basically where my head's at for this, right? So we can check off everything off the list now. I guess I'll just quickly play this out. You guys know how this went. So again, obviously we hit the order block here. So if you were targeting this order block and entering on the 4-hour time frame, and I'm sure there were lower time frame opportunities for this as well, this would have been great. It's a great trade. But the thing is, this doesn't always happen. As we all know, this doesn't always happen. So oftentimes the extreme order block is missed. Sometimes price will just go within a couple pips of it and then take off without actually mitigating the order block. And at that point, it's pretty much gone. Not that targeting the order block is like a bad way to do things, but like I explained at the beginning of the video, it's just not something I'm prioritizing anymore. As I mature in my trading career, as time goes on, I just want to simplify things more and more and more. When I was first getting involved in SMC, I wanted to know everything. I wanted to know every detail of why every tick moved. I wanted to know how to predict everything, how to capitalize on every possible move on the 1 minute time frame. I'm just not like that anymore. I was trying to target 20R trades, 15R trades, 10R trades. I could care less, you know, at this point in my career. So as time goes on, I just want to simplify things more and take a more passive approach, because I don't want to be a slave to the charts. I don't want to be sitting here for hours a day staring at my screen, feeling like my eyes are about to bleed. It doesn't make me happy. I'm not happy trading like that. And the reason most of us are trading, I think I can speak for most people here, is for freedom. Obviously monetary gain as well, because trading is an uncapped endeavor. But the main thing here is freedom. We don't have to answer to a boss. We don't have coworkers necessarily. We don't have a fixed schedule necessarily. We don't have a fixed location either necessarily. So all of these pros about trading, I want to be able to benefit from those. I want to actually experience that. I don't want to be a slave on my charts all the time. So this is why I keep saying, as time goes on, I keep brainstorming ways to simplify my trading and to make it more of a passive endeavor. And I have to thank again our coach Steven, because he inspired me to move more towards this direction. It was always in the back of my mind, and I was kind of leaning more towards that direction anyways. But when he started making that switch and sharing his results with me, and we talked a lot about it, it inspired me to really take it more seriously and really start leaning more towards swing trading and higher time frames. So I could care less about the intraday little movements here and there. It's not important to me anymore as my life progresses. You know, that's all I can say. Let me continue here. Let me just take off replay mode. It's going to take too long. I haven't taken a trade on NZD USD in a while, but Let me show you one of the other ones I took here too. So yeah, it was right here from this swing high to this swing low. Let me just extend it out. Quick note here, I always have the magnet tool enabled. That helps me snap the tools from exact wicks, right? I don't have to mess around with it. It just snaps the tool right to the wicks as precisely as possible. So as you can see, this was another really good example. And again, this kind of plays into what I was saying earlier about just not being too precise about the entries anymore. Because if I were to just, let me delete this for a sec so we can really focus on this. If I were to just be focusing on order blocks here, actually, let me use the replay tool just to make this more clear. If I were to be focusing on only order blocks here, this one technically wouldn't be ideal for me. I don't like that. I like to see an engulfing pattern for order blocks. So actually this would have appealed to me more, and there was significant imbalance below it, but we do have imbalance up here as well. So when you drag the Fibonacci tool here, again, it's just a more simplified way of entering a trade. The strategy remains the exact same, guys. Even the 4-hour and 15-minute strategy that I posted on YouTube for free, and that we have a whole chat in the community dedicated towards, you can use this with that exact strategy too. It's just when you're ready to enter, just draw the fib tool and enter that way. You can obviously enter off of order blocks if you want. You can also enter just off of the imbalance if you want. A lot of people do that too. Nothing wrong with that. You have to figure out what works for you. The main point of this entire video is telling you guys that this is personally where my life is leading me towards. So this trading plan works specifically for me. It might not work for you, but I hope that either way, this is good insight for you. But anyways, I digress. Let me get back to the point of what I was talking about here. When you draw the Fibonacci tool, remember what I was saying, guys, about the premium and discount pricing, how this is a better way to gauge premium and discount pricing because it's the extreme prices, right? 71 and 79% retracements. Those are deep into premium pricing here, right? So basically, even just focusing on these two retracement levels, it already disqualifies this order block, which helps me not be liquidated, okay? Because that could easily be used as inducement to induce early sellers, and then they get liquidated. That happens quite often. So just by simply focusing on these two levels, that alone helps me avoid being liquidated unnecessarily. Now you can see that they also, these retracement levels also line up nicely with this imbalance. And technically this candle here is an order block as well, not one that I would prefer. But so in this case, I'm more focused on the imbalance, right? Because that is a huge confluence, potentially even more of a confluence than the order block. That's debatable. They both kind of go hand in hand, so that's really debatable. But the important part here is that we do have an order block, we do have an imbalance, we do have a clear swing high, a clear swing low, and these are deeply premium prices, deep premium prices, should I say. So this was another good trading opportunity. And again, if you were trading from order blocks and you identified this as an order block, then that's great. Again, you would have been involved in this trade, and that's fantastic. But like I said, this is just a simplified approach to entering a trade. And not only entering a trade, but it's actually also a more simplified way to frame your trade. So instead of, let me use the replay tool again here quickly. So let's delete this for a second. Let's say you wanted to enter off of this order block, right? You're going to set your limit order at the low of the order block, your stop loss at the high, for example, and that was going to be your trade. Your stop loss is already set. Now, where do you take profit? Some people automatically do go to the low. So yeah, that's great. Your risk reward ratio would be generally the same. However, a lot of the time, it's tempting to just target the opposing zone, the opposing order block, right? Which could be this one here. It could be this one down here. These are valid zones to take profit at. So you could, set it down here, for example, to get a decent risk reward ratio. Now, instead of figuring out which zone to target for the take profit, it's just so much simpler to just target the low or the high of the current range that you're in. So if you cross-reference what I'm saying now to the trading plan on the right here, once you draw the Fibonacci tool, it helps you frame your trade. So all you have to do is simply set your limit orders at the retracement levels. Your stop loss, no matter what, guys, no matter what, the stop loss goes at the high in this scenario, obviously at the low in a bullish scenario, and your take profit is at the opposing high or low. High or low. Sorry, let me clarify that, not high or low. So it's a very straightforward way to frame your trade, right? We have our stop loss, we have our target, it's all right there in front of us. We're not targeting something in the future, like too far away just to get that big, 8R, 7R, 10R, etc. It's just quick in and out, guys. Quick in and out. And keep in mind, on the 4-hour time frame, this represents a lot of pips. This is 83 pips, so that could be like 2 full days potentially, right? Maybe a day, but usually a pair only moves like 30 to 50 pips in a day. So right there alone, you can judge that this is going to be at least a few days of holding. So my point is, it's just an easier way to enter the trade. It's an easier way to frame the trade. And one of the reasons I'm so excited to make more content about this and update the course as well is because I feel like this will help people achieve good results faster, right? I want people to be more consistent traders. Obviously, that's the reason why I do what I do. That's the reason why the community exists in the first place. But I understand that with smart money concepts, or supply and demand, or whatever you want to call it, there's a lot of discretion, right? So if we make our strategy more mechanical, such as this one here, which again, you can apply to any time frame at all, then it really simplifies the process, doesn't it? I think that this would be a great way to teach beginners because it is definitely a more beginner-friendly strategy. And it's funny because if you look on YouTube or Twitter or Instagram or whatever, you're going to find a million different educators who make things as complicated as possible. You guys all know what I'm talking about, right? There seems to be some sort of new smart money concept every week or two, and it's just exhausting at this point. But the most profitable traders in this industry, a lot of whom I met at the FX Summit in Miami this year, and I'm talking 7-figure traders, 8-figure traders, like some big boys in the space, not 100K funded traders. I mean like 7-figure personal account traders, 8-figure personal account traders. They trade the most simple, stupid strategies you can think of. Literally Fibonacci or support and resistance, or like break and retest, which is a form of support and resistance, like just silly, stupid things. And they're wildly profitable because they have simplified their trading. All these new concepts come out every week, and it's just, like I said, it's just exhausting. And it's basically a distraction from what's really in front of you. You don't need all the fancy bells and whistles. I think that this is a much more simplified approach. And obviously we can pair it with all the confluences that we would normally have, like order blocks, imbalances, clear breaks of structure with big volume behind it, right? A displacement. All of those things combined make for a good trading opportunity. And the Fibonacci tool is simply a way to enter the trade and frame the trade in a very easy, simplistic way that a toddler could understand. So just to sum that all up, this is basically why I want to start talking about this more and implementing more of it in updated course content, because it takes a lot of the guesswork out of it. If you just use this to frame your trade alone, then you won't have to second guess which order block out of these 3 or 4 should I choose, or is this valid, is that valid, blah, blah, blah. This simplifies everything so that it makes it more of a mechanical strategy and less of a discretionary strategy, okay? Let me get to the last point here before I wrap up this video for you guys. I have one section at the bottom here called scaling in. Now what that means basically is scaling into trades. Let's say that this was my initial position and I was involved in it, which I was, but I was still, let's just say I was still holding it past this low for whatever reason, right? Let's say I was targeting, somewhere down here, a Fibonacci extension maybe, just hypothetically, right? So price comes down, makes a new low, breaks the structure, and then starts retracing back to the upside. But I'm still active holding this trade. So if I want to scale in, obviously we just identified that this was a good trading opportunity as well. And let's say I wanted to add to my position, right? I wanted to add 2 trades here. So I entered 2 trades here already at the 71 and the 79. So I'm already involved in this trade here. But when price presented me a new opportunity, I wanted to scale in and stack 2 more positions onto my overall trade idea of this bearish trend. So all I have written here, it's very simple. In order to scale into a trend and stack positions, the original positions must be moved to break even to remove risk. So again, pretty straightforward, guys. If I want to scale into this trade idea, all I would do in this case is move my stop loss to break even so that the risk is eliminated from this trade, and then stack in 2 more positions here so that I'm basically diverting my risk into new positions, right? The risk was eliminated from here, and I'm back to risking 0.5% total on this trade here, and targeting wherever, stop loss just above here. So that basically sums up stacking into trades, right? And so again, just to clarify, if I'm only risking 0.5% per trade, but I'm splitting it into 2 different positions, that means I'm entering limit orders, setting limit orders at 0.25% risk at the 71 and another 0.25% risk at the 79. Obviously that adds up to 0.5% risk. Again, pretty straightforward, guys. I hope you gained a lot of valuable information from this and insight, and maybe you can implement it in your own trading. And I just want to clarify a couple things here. You can apply this to any time frame you want. I find that it's nice to do it on the 4-hour time frame. I know Steven enters as well a lot on the 4-hour time frame. If you really wanted to swing trade, you could do the daily time frame, but that's a little much for me even right now. You can apply this to the 1 hour, the 15-minute. It can really be that simple. You can apply this to any time frame you want, any session you want. So speaking about sessions too, for me being on the 4-hour time frame, I could care less about sessions. Okay, it doesn't matter to me when I'm actually swing trading. If you wanted to apply this exact strategy to, let's say, the 15-minute time frame or the 30-minute time frame, maybe even the 1-hour time frame, then it would be best to focus on the peak times of a specific trading session. So for example, the morning hours of New York session, which is around 7 a.m. to 11 a.m. Eastern Standard Time. Or during London session, it would be around 2 a.m. to 5 a.m. Eastern Standard Time. You can do the conversions for wherever you are in the world. Those are the most active sessions and the most active times during those sessions. So if you wanted to apply this to a lower time frame, then you have to focus on those sessions and those active times. You want to be getting involved during those times. Obviously, if you're deep in profit, you can hold the trade into other sessions, but you want to be entering during peak times of your desired session. Now, again, for me, for the 4-hour time frame, or if you're trading on the daily or whatever, the sessions just don't matter because it's rare that you're going to be able to pinpoint an entry during an exact time. These moves take a long time to play out. You have to have patience to watch these develop. So the timing becomes kind of irrelevant. I'm sure there's going to be people who disagree with me on that, but respectfully, I could care less. This is what's working for me. The timing of this strategy on the 4-hour time frame doesn't have much relevance. So I think I covered just about everything. If anybody has any questions, feel free to reach out to me. But again, this is what's personally working for me. This is what I'm currently trading. In the future, maybe I'll tweak something. I don't know. If something's not working for me, I'll certainly tweak it. But again, this is what works for me. So instead of reaching out to me saying, can you send me the template for this? I want to copy it. Just make your own and tweak it to fit your personality and your lifestyle. Because we're all different individuals. We can trade the same general strategy, but there are going to be differences. We shouldn't all be trading the exact same way because that's not really how trading works. We want to personalize things to fit our lifestyle, right? And that ties in again to what I was saying earlier about the freedom of trading and the real benefits of trading. In order to fully capitalize on the real benefits of your trading career, you need to make it fit your lifestyle. Don't be a slave to the charts. Don't be staring at your screen all day. Make trading work for you, guys. You're not a slave to this. You need to be able to adjust accordingly so it can fit your lifestyle and that so you can be happy and truly free. So I hope you guys enjoyed this video. I know I rambled quite a bit, but I'm confident that there was value in all of the things that I said. So feel free to watch this over a bunch of times. to really drill down some of the things that I said. All right, everyone, I truly hope you gained value from this. If you did, I would appreciate if you'd like the video and subscribe to my channel for future content. If you'd like to leave a comment below, please remember to be respectful. And if you want to follow along with my own personal analysis and trades, then click the link in the description of this video to join the Currency Pros community. Thank you all for watching, and until next time, take care.